Delaware LLCs have become a popular choice for business owners across the United States, thanks to the state's favorable tax environment. But what exactly are the tax implications of forming a Delaware LLC? Let's break it down. At its core, a Delaware LLC is required to pay a flat annual franchise tax of $300, regardless of income. This simplicity is one of the main attractions for business owners. However, the tax landscape becomes more nuanced depending on how you choose to classify your LLC for tax purposes. By default, Delaware LLCs are treated as pass-through entities. This means that profits and losses flow through to the individual members' tax returns. For single-member LLCs, this translates to being taxed as a sole proprietorship, while multi-member LLCs are typically taxed as partnerships. But what if you want a different tax treatment? Delaware LLCs have the flexibility to elect S-corporation status by filing the appropriate forms with the IRS. This can potentially reduce self-employment taxes while still maintaining pass-through taxation benefits. Alternatively, an LLC can choose to be taxed as a C corporation, subjecting it to Delaware's corporate income tax rate of 8.7% on taxable income earned within the state. Now, let's focus on the franchise tax, which is the cornerstone of Delaware LLC taxation. Every Delaware LLC must pay the $300 annual franchise tax by June 1st each year. This applies even if your LLC didn't generate any revenue. Failing to pay on time results in a $200 late fee plus 1.5% monthly interest on the unpaid balance. For LLCs that elect corporate tax status, there's an additional layer of complexity. These entities must calculate their taxes using either the authorized shares method or the assumed par value capital method. The specifics of these calculations can get intricate, so it's often wise to consult with a tax professional. One of the most attractive aspects of forming a Delaware LLC is the state's reputation as a tax shelter. Delaware offers several tax benefits that make it an appealing choice for businesses. There's no state sales tax, which can lead to significant savings. Additionally, Delaware corporations that operate outside the state don't pay state corporate income tax on goods and services. The state also doesn't impose taxes on intangible assets like royalties, patents, or trademarks. This makes Delaware particularly attractive for holding companies and businesses with significant intellectual property. Furthermore, non-resident LLC owners who don't conduct business within Delaware are not subject to state personal income tax. When it comes to paying your Delaware LLC taxes, you have options. You can pay online through the Delaware Division of Corporations website, mail in a check or money order with a tax payment voucher, or use a third-party filing service. Many LLCs opt to use registered agents to handle their tax payments and ensure compliance. In conclusion, Delaware's LLC tax structure offers simplicity with its flat franchise tax, flexibility in tax classification, and numerous tax benefits. However, it's crucial to understand your specific tax obligations and deadlines to maintain good standing with the state. While Delaware's tax environment is generally favorable, remember that if your LLC operates in other states, you may still be subject to their tax laws. As always, when dealing with complex tax matters, it's advisable to consult with a qualified tax professional to ensure you're making the most of Delaware's business-friendly tax landscape.